This quarter's edition of the Australian Investor magazine is about the potential for lower interest rates over the next couple of years and how investors should be positioned to benefit most from that. In the prior few years, we've seen interest rates rise significantly, and that has been difficult for investors. But now we're starting to see around the world countries lower interest rates. In the US and Australia, it could take a little longer. There may still be the possibility that interest rates could rise here. I think the broader direction of rates over the next few years is likely to be down. Go back to the rise in interest rates over the past couple of years. It was intended to reduce inflation. That has fairly well been achieved now. There's been a lot of progress. We think investors should be well positioned in income and growth assets now, and not as cashed up as they may have been preserving capital over the last couple of years. In income assets, we're recommending an above normal positioning in fixed income. And in equities, we're recommending a positioning at about normal benchmark, not necessarily above just yet, because it could still be a bit bumpy in the economy. We think investors should orientate more now towards more cyclical stocks, in particular the resource sector, particularly with interest rates falling in the advanced and emerging economies, and also a possible turnaround in policy in China, which could support commodity prices, which have already started to lift a little bit. And the other area that we think has been left behind a bit is the real estate sector, but we think those areas could continue to recover with an economic recovery and as interest rates come down.